Hello everyone. Prashant started Whiteoak India business around 6 years ago. Before starting Whiteoak India business, he was with Goldman for around 17 years. He was with USA Goldman to start his investment career. Then in 2006, he moved to India to start Goldman India business. In 2013, he moved to Singapore to chair the CIO as well as the co-fund management team of Emerging Market Fund. Now, as I said that Whiteoak is around 6-year-old, we started our first PMS offering in September 2018. If you look at our performance from September 2018 till 31st May 2023, we have given a CAGR return of 16.7% versus a benchmark return of around 13.7%, which translates into around 300 basis points for alpha. Now, talking much about our investment philosophy, our investment philosophy or our broader investment culture is based on 4 pillars: team, bottom-up stock selection philosophy, time-tested and in-house developed OpcoFinco Framework, and balanced portfolio construction. Now, I can talk about each 4 pillar in a 2-3 lines. Firstly, about our team. We have a very well-resourced team of around 27 investment team members. We have team members, we have a very high global experience. We believe in a philosophy of team within team culture, as well as the experience of the team is more than 100 years. Now, this has helped us in terms of finding out the great investment ideas. Now, talking about our investment philosophy, our shared philosophy is that we believe that outsized return is earned over a period of time by investing in a great business at an attractive valuation. Now, here the 2 key elements which are very important is that we want to invest in a great business at an attractive valuations. Now, wherever we find a powerful combination of these 2 is where we want to invest. Now, a great business is something which has 3 key attributes. One is better return than the investment capital, management bandwidth, and the industry in which the company operates should have much higher leeway for growth. Now, once we identify a great business, it is very important to buy them at a price which leaves substantial upside for the investors. And here comes our OpcoFinco Framework, which is we have developed, nurtured over last 15 years. And in this method, what we do is that we divide any company into 2 parts: financing company and an operating company. A financing company is something which house plant, machinery, equipment, and the operating company will be a pure operating company. And all these calculations are done and the ratios are then arrived to compare each company which are under our coverage universe. We here don't talk about PE methods, we don't talk about EV/EBITDA. It is all cash flow based asset light analysis on all the 750 stocks which are under our coverage. Now, once we find attractive company after applying this OpcoFinco Framework, something which then comes into your portfolio. Now, just to give you an example, there are around 750 odd names under our coverage. As I said, out of this, at any point in time, which is a great business, something would be around 175 to 225 names, or on average around 200 names. And after applying a valuation filter, what we get is around 60 to 65 names which would be there in your portfolio. Now, the 4th and the important pillar is the balanced portfolio construction. Here at Whiteoak, we always believe in a very balanced portfolio. Reason being that it kind of reduces the risk substantially. We will have exposure across sector, across industry, across style, whether it is value, growth, or anything. So, this balanced portfolio ensures that the deviation from the mean or deviation from the benchmark would be relatively low compared to any other fund or the scheme in the markets. So, these 4 pillars ensures the alpha as well as the consistency of alpha over a period of time. So, this is our broad investment philosophy, which, as I said, depends on the team, bottom-up stock selection idea, our in-house developed OpcoFinco Framework, and the balanced portfolio construction. Now, talking something about our portfolio currently, if you look at our portfolio, again, is very well balanced. Around 33% of the portfolio is into financial services, around 14 to 15 names. In these 14-15 names, again, of course, against the benchmark of 85-86, maybe it is very near to the sector weight, but the combination of stocks here is quite different versus rest of the markets. We own good private sector banks in India, some of the NBFCs, some of the very niche NBFCs which are very small and can deliver substantial return over a period of time. We do have a good combination of insurance exchanges here. So this is about financial services. We are also under our bottom of stock selection, we are also quite bullish on mid-cap ITs. There are good companies out there which does a lot of cloud computing or any other niche business for global clients, and they should do also very, very well. We have good exposures in healthcare. Again, a domestic chronic business or domestic branded pharma business or even a chemical business is something which we are very bullish on. And last and not the least, as India kind of now progresses towards more capex, etc., we do have good combination of stocks in industrial, capital goods, and some of the recent scheme like defense as a as a sector which is doing quite well, or PLI as a scheme which is doing quite well. We have a good combination of stocks there. I think our industrial exposure is somewhere around 15-16%. Versus a benchmark of around 8%. Our exposure, as I said, about healthcare or pharma, it's around 10% versus the benchmark of 5%. So it's a very actively managed portfolio for you, and combination of our investment philosophy, active portfolio and balanced portfolio construction will drive alpha as well as the consistency of alpha. Thank you very much.